everybody. Today is September 12th, 2023. I am Ashley Wilkin, Senior Wealth Manager with the Rice Partnership, and I have Orest Saikevych here, our Chief Investment Officer. Hi, Orest.
Hi, Ashley. Hello again, everyone.
So today we're going to talk about geopolitical risks associated specifically with China. The U.S. is the #1 economy. China is the #2 economy. Our two countries have been at odds really for the last decade, since 2012. But it seems recently the tensions between the two countries have been heightened due to the technology wars and also the cybersecurity risks that have led to national security concerns here in the U.S. From an investor's standpoint, have these new heightened tensions between the two countries, are they cause for concern for investors?
Yes, Ashley, they are a cause for concern. Many U.S. corporations have exposure to China ever since China was opening its economy for trade in the 1990s. The exposure is both in terms of sales, in other words, exports there, and also a lot of companies have production facilities there as well. And so overall, the decoupling for China is probably going to be a messy and costly process.
So what are we doing in investor portfolios to protect clients against these risks with China?
Well, first of all, and this goes back to the principle of diversification, our portfolios to begin with don't have too much as far as a percent of total market value in any one stock. It's kind of the old principle of, as some people say, not being married to any one stock. So that's very important as far as limiting risk. Also, we've monitored China exposure for some time in our firms. In a way, it's very tough not to have any exposure, but we've tried to monitor the overall exposure to where we feel it's manageable. And then finally, as far as our international equities are concerned, we have not invested in the China ETF ever, really. So we haven't liked China overall because of various issues, including lack of transparency, etc.
So what should investors be thinking about related to the U.S. and China tensions?
Okay. Keep in mind that fortunately, the U.S. economy is more inwardly focused than with respect to exports being a smaller percent of the GDP than other countries. And that includes India, by the way, which we have invested in. So that's very important. There are countries that are very dependent on exports, China being one of them, Germany being another one. But fortunately, the U.S. has a more inwardly focused economy overall. And then the other factor is that trade will probably be hurt the most in goods rather than services. In other words, manufacturing goods than services provided. And so there, we've got a much smaller percent of our GDP that is manufacturing related versus China. So overall, the U.S. economy should be at least somewhat insulated from any of the problems.
Thank you, Orest. We appreciate your insights as always. Definitely something that's still developing, and we will be watching out for it for clients.
Thank you, Ashley. Take care, everyone.